Well, it is time now to answer your legal questions. Go ahead and give us a call now. You see the number at the bottom of your screen. You can call or text 256-536-0077. Now, William is serving with our friends over at Timberlake. Leek and Brooks joins us this morning. It is always a pleasure to have you here.
I'm glad to be here. It's always a good time.
Yeah, we do have fun, don't we? we try to. In the commercial breaks, we try to talk about some stuff. But today we are going to talk about full coverage. We hear the term all the time, but a lot of people, when you go to kind of break it down, they don't really know what that means.
They don't, and unfortunately, it's something we see quite often when folks call our office, right? And they've been in a wreck or something's happened, and they're oftentimes surprised about what's covered and what's not covered. And so full coverage is just a term that encompasses several different insurance policies, sort of under one umbrella, for lack of a better term. And so the only coverage required by law is liability.
Right.
And liability really doesn't protect you against injuries or property damage. It protects your personal assets. So if you're at fault for the wreck, someone else can make a claim against your coverage, and that can cause your rates to go up, you can get canceled, so on and so forth. Full coverage encompasses a series of no-fault policies, which are designed to protect you. So if you get hit by somebody with no insurance or not enough insurance, it may pay out towards medical bills. If it's a situation where your vehicle is damaged, it'll pay out towards property damage under your collision policy. And so it's a series of individual policies that will pay out in these different circumstances. And it can really be true of homeowners policies and different things as well. And then all sorts of companies have all sorts of riders and different things that you can add in, right? So if you're delivering for Grub South or Uber or one of these other companies, you have to have a rider on your insurance or you're actually not covered. And a lot of insurance companies today have these other sort of gimmicks, right? Which is, under Alabama law, you're only entitled to your fair market value, okay. On your vehicle. So if your car is totaled out, they're going to pay you the fair market value. It's similar to the Kelley Blue Book, but they don't use the Kelley Blue Book. And oftentimes, people don't have their vehicle's not worth what they think it's worth.
Because in my mind, my vehicle is worth like $50,000, but in actuality, it's $5,000.
Probably. And, so a lot of companies now are offering, you can buy an additional policy that'll pay out 40% north of the retail value of your car, which is similar to what folks want the law to be, which is replacement value.
Right.
But the law does not require them to replace your vehicle. They do not have to put you in a same or similar model or anything like that.
And I think that's the big thing right there, because when we know, or when you get into an accident, you're thinking that's going to happen. How often does that happen when somebody comes into your office and they're like, hey, I just want my vehicle replaced, the same thing I have?
Very rarely. Oftentimes people owe more on their vehicle than it's worth. And that's when something called gap coverage comes into play, and you've heard that term.
Right.
Gap coverage you don't buy through your car insurance. You buy that through the loan, right? So it's either going to be through the dealership or through the finance company that's financing your auto loan. But you can buy gap coverage, and that protects the difference in what you owe versus what your vehicle's worth.
Right.
There's many folks out there, unless you put down a pretty decent car, down payment and finance it on 5 years or less, chances are you owe more on your car than it's worth.
And you're upside down.
That's right.
That is wild. I know for some people, why do you think, or what is the biggest hurdle people do not go for that full coverage?
They think it costs less. And it does cost less if you're never in an accident, right? But if you're ever in an accident, you owe more than those premiums would have been had you just paid a little bit along the way. The other thing a lot of people don't realize is the most substantial cost in car insurance is that liability policy. And so, to add on full coverage, it's typically not doubling the payment because it's more rare that you're going to need those other policies, but when you need them, you're glad you have them.
Exactly.
And so a lot of times you can add on those other policies for not as much money as folks think.
Oh, that was such good information right there. I love when you come on because you're able just to break everything down in simple terms.
It's unfortunately a byproduct of having witnessed so many people go through tough times, and it's a hard thing.
Yeah, it definitely is. But I'm glad you all are there over at your office to help them.
Absolutely.
Well, that is all the time we have for this segment, but if you did not get your question answered, go ahead right now, go look at their blog. It's lawinjury.com/blog. You can get a lot of the questions you may have answered over there. And don't forget, you can always give them a call at Timberlake, League, and Brooks. We have the information on your screen. Well, William, as I've already said, it is always a pleasure, and we look forward to you coming back on again.
Glad to be here.
Of course.